Welcome back to The Breakfast Show. It's 9:10 on a Tuesday morning, and that means it's time for Financial Freedom Minutes with our resident money man. And today he'll be speaking to us about investing in property.
Now, a lot of us put our hard-earned cash into a house, condo, apartment, because we expect it to appreciate in value and thus make us a profit.
Yeah, but is this a sure thing? And should you gamble with your very first home?
So to answer these questions and a whole lot more, please do welcome back Mr. Yap Ming Hui, our financial freedom guru, and it's over to you, Mr. Yap.
Good morning, fellow Malaysians. You are now watching Financial Freedom Minutes with Yap Ming Hui. Now, today I'm going to talk about property investment. Warren Buffett has said before that never invest into anything that you don't understand or you don't understand completely. So in Malaysia, we like to invest in property, and I believe many of us may hold some property investment. Now, the question is that whether we understand property investment exactly as supposed to be. Okay, so today I want to share what are the pros and what are the cons of property investment, and how do we ensure our success or at least increase our chance of a property investment success. So first one, we need to talk about what are the advantages of property investment. So if we invest in property, we know that property investment is a good hedge against inflation, so that you can make sure that if you worry about inflation, you put your money into property, the property prices normally grow faster than inflation. Number two, we know that property investment, actually you can do it by leveraging using bank money. So if you invest in a property for 1 million, you don't use your money totally, you can actually use maybe 80% or 90% coming from the bank loan. And thirdly, of course, property is something tangible, solid, you can see, you can feel. Number fourth, obviously, property investment offers you not only capital appreciation, but it also gives you rental income. And last but not least, property investment is also good in a sense compared to a share market, which is very easily impacted by bad news. Say, for example, when there's like Iceland country go bankrupt, or maybe there's a Japan tsunami, share market like collapse by 5%, 10%, that's very easy. But property market, you don't see the property prices fall down like that. Okay, so at least that is not so easily impacted in that sense. Now, then next we need to look at what are the disadvantages of property investment. Like what I said before, there's no perfect investment. Whatever investment has got pro and also got a con. Now, look at this disadvantage of property investment. Then you can see there's number one, there's no known valuation method. You see, in share investment, such thing called PE, price earning ratio, whereby if PE ratio is like less than 10, you know that the share price actually is cheap. If the PE ratio is more than 20, then you know that the price may be expensive. But in property, whether the property is expensive or cheap is anyone's guess. Next, there's a capital gain tax for whatever profit you make from property. So that's why you can share this money or profit you make from property investment with the government. Third, there's a liability risk. You see, this is actually a two-edged sword. In a sense that you can use a bank loan to go for property investment. At the same time, it also gives you liability risk. What do I mean by that? Say, for example, you have a property investment into an investment property of 1 million. So then you take a loan of 900,000. Should there's actually market crash, okay, and then property prices drop to 700,000, and then you cannot afford to pay the bank installment, the bank force sell the property at 700,000. So in this case, the bank will recover 700,000 and you still owe bank 200,000. So this is what I mean by liability risk. Okay. Next, last but not least, we call it illiquidity because it's difficult for you to turn into cash. Now, when I talk about this, the difficulty to turn into cash, some of you may say, Mr. I cannot imagine. The Malaysian property market now is so hot. Everywhere you sell, buy properties now is so easy. But we cannot actually imagine how cold the property investment will become unless we actually experience any market crash position. So that's why next slide, I want to show you a slide which shows how the property market can crash. This is an example of how Hong Kong property market crashed during the Asian financial crisis. You can see since 1997 up to 2003, the property market can crash from the sale, example, from 100% crash down to 40%. So which means to say if you have a property which is worth 1 million, it can go down to as far as 400,000. So in Malaysia, okay, don't imagine such two scary pictures. If you just imagine what will happen to whatever property investment that you have now, if there's a crash of, say, 30%. No? Then you understand what I mean by these disadvantages, the illiquidity, how to the difficulty to turn this property into cash, and then if you have emergency needs for the cash, that's where a lot of people will be stuck, and that's why people say cash is king in recession. Now, last, I'm going to share how do we invest successfully in property then. Now, first, we need to understand different investment has got different strengths and weaknesses. If you look at the property investment offer you good potential, high potential return. It gives you moderate risk on the capital, which is the chance of losing your money, and it gives you very low liquidity. Whereby share investment give you high potential return, give you also high risk on your capital, but it gives you moderate liquidity. Whereby bond offer you moderate potential return, moderate risk on your capital, and moderate liquidity. Now, last but not least, we talk about fixed deposit. Give you very low potential return, but it gives you also very low risk for your capital, and it gives you very high liquidity. Now, what's the conclusion you can make from here? If you look at here, you can actually conclude that property investment has got certain strength that other investments do not have. But property investment also got certain weaknesses that other investments do not have. So, to invest successfully in property, what you do is to address property investment weakness, like this illiquidity, with the strength of other investment. Now, for example, fixed deposit and share market, which can offer high liquidity. So that's why I always advise Malaysians that if you would like to actually make sure of success in property investment, never invest more than 50% of your wealth into property, so that you can always put another 50% into other kind of liquid asset like cash and shares. So in this situation, if the property market were to crash, you are not worried because you still have a lot of cash to service whatever loan installment. You can even have cash to buy some property at a long. So that's what I have to share today about property investment. Back to you, Nas and Joanne.
That was my name there.
Yeah.
You so long.
No, he was staring at you. God, too beautiful. I forget the name.
Yes.
I
Beautiful
love
after
how we
coming
try
back
and
from
cover up the
Thailand.
mistakes. But back to your topic at hand.
Thank you very
Now,
much.
a lot of this that we're discussing, and we've asked our viewers this question before.
Yeah.
When you talk about investing in property, you should discount. Is it true that you should discount your first home?
Yeah.
Because that really is a roof over your head. Whereas
Yes.
you talk about investing in property, it's property after that.
In fact, I was just talking to a lady before I came inside the studio to say that if you were to buy a home, okay, because now, for example, we are renting or we are staying with parents.
Yeah.
So if we need a house to put a roof on our head, then what we need to do is that the way we buy the property will be different from we actually investing in a property. So if you would buy a property for your own stay, so even if there's a market crash later, it does not really affect you because you will still be staying in the property maybe for the 5, 10 or 15 years.
Right.
Okay? But whereby if you are investing property for investment purpose or worse still for speculation purpose, whereby you know for sure you got no money to service the installment, and you just want to buy and then hope to flip the property after it's been completed, then you need to consider what I shared with you just now.
I see. So different strategies if you're going for your first home and different strategies for investment. Now, one of the tips is, of course, no more than 50% of what you earn to invest in property, yeah? But this is the nature of man, greedy, of course, you've got great returns. And what if you do put more than 50%, are you in danger here in Malaysia?
What are some of the risks?
Okay.
Yeah.
Okay, to the question that I actually mentioned just now, what I suggest actually is to say that 50% of what we own, and not what we earn.
Right.
Okay, what we own.
Huh?
Yeah. So, for example, if you have EPF, you have cash, you have shares, you got unit trusts, plus property value should not be more than 50%. Okay, because it's quite common that I got clients come to my office and say that when they evaluate the properties, they got 97%.
Wow.
Of their total wealth. Say, for example, this guy may have, say, 10 million. He got 9.7 million in properties.
Really?
Very little cash. Now, imagine in these situations, and then these 9.7 million of properties are all actually like 70% loan. Now, in a situation, 70% or 80% loan, in a situation that market crashed by, say, 30% of the property prices, then if he would have difficulty paying the loan or there's not enough tenant to pay the rental for him, he got problem servicing the loan installment, the bank may take the property back, for sale it, and then if a much lower price, and ask him to top up the difference. So he may end up in a position not only insolvent, it could become a bankrupt because of a property crash.
So despite having all these properties, if you're not cash rich, or if you don't have that cash to spare,
you don't have liquidity to back you. Yes.
Right. But you know, talking about property crashes, you cited Hong Kong as an example where prices were bad between 1998 and 2003.
Yes.
But as of a recent study, Hong Kong today is the most expensive place to live in the world.
Agreed.
So how long does it take for the property market to recover, would you say?
Yeah. You see, the challenge of property investment is that property market will continue to go up. So you must not have the kind of impression that I'm saying that property market in Malaysia will go down. Okay, I'm saying that property market in 10 years' time, 15 years' time from now, definitely will be more expensive than now. But the question is that in between, say for example, 1 year later, 2 years later, because there's oversupply of property, because of bank interest rate going up, people cannot afford to pay the installment, property market crash or adjusted. Okay, don't say crash. Very scary word.
I mean,
adjusted.
Yeah,
then the question is that how do you sustain yourself? How do you pull yourself through this period of time? If you can't pull yourself through this one, whatever the boom happening later belong to those people who get cash.
Yeah.
Those of you who are like up to here, go to the loan up to here, you'll be like buried, and the property will be long. And people like us and us, and Joanne, of course, I will invite you. We will go to the auction house. We're going to pick those discounted property prices.
I see.
So it's like what you want to make sure is that you do not become a victim of a crash. You want to make sure that by keeping 50% liquidity, you can make sure that you can be also the benefactor of the crash as well. Yes.
Right, that's one way of looking at it. But you know, even with the financial crisis of 2008, right, Malaysia's property market wasn't as affected as the rest of the world. What are some of the factors that keep our property market so resilient?
Yeah, even with the subprime issue that happened, we were still pretty stable.
Yeah, I think this one...
Because I know I went out looking for a home and couldn't find a cheap one.
Yeah, that's actually very true. Because actually in Malaysia, our government actually has been very good in actually controlling the property prices, the development prices, and also the bank interest rate, which is very important. And also the credit in Malaysia and the loan have been given to those people who can afford to get the loan. You know? In the US, the difference is that US will have subprime problem because is that they given if these people to even can't afford to pay credit card, they also give the loan to buy property. So the property prices actually because of loan, easy loan go up so high. No? So that's why, but we must not assume that if 2008, this kind of crisis does not hit us, it would not hit us at all or forever. This is what Americans used to think also when this guy, Alan Greenspan, was a federal chairman. He said, oh, no, there's no such thing of adjustment. We'll continue to do well. There goes such thing. So the idea is that if we want to be a sure-win success investor, we need to think about the good time. You need to think about also the bad time as well.
And when you hit bad times, a lot of people also remortgage their properties. Does that really help?
No. The question is that when actually there's bad time, you don't have money to pay the these mortgages and that you want to actually remortgage. Now, the issue now is that now the loan is so easy. The bank can give up to 90%, no, some even 95% of the loan for the property price. Okay? Now, but we must not assume this thing will continue. It's a lot of things assumption. No? If the bank actually is very skeptical of the situation, no, then they may say that you want to remortgage, I may only allow you to remortgage 50% of your loan, of the property value. No, in this case, not only you won't be able to get more loan to finance your loan, you will need to even fork out more money. You know?
Okay, so these are
so
the few things
we must
to
not assume that whatever happens now will continue to be true into the future.
There you go. That's one thing about property. You must not assume that everything is set in stone.
So basically, your advice is yes, invest in property, but also make sure you're liquid.
Yes.
Excellent. With that, I think we've run out of time. I want to ask so much more. There's so much more over here, but well, what to do? I mean, we've just got this much of time here on The Breakfast Show. Once again, Mr. Yap Ming Hui, thank you so much for coming in. I've learned quite a bit. And, well, one thing we must always bear in mind is when you invest in a property, it doesn't mean it will go up. Yeah, we want to dispel this notion right now.
Myth.
It could go up, it could go down, and it's all up to you.
Of course, if you have any questions that you'd like to ask Mr. Yap, you can always email him at inquiries@yapminghui.com, or you can even send an SMS to 01239000048.
Alternatively, of course, visit www.yapminghui.com for more information, and he's got great templates as well that you can download and use to, of course, have you become a financially savvy Malaysian.
Yes, and of course, he will be back with us next Tuesday.